All right, so with that in mind, let's turn back to the broader markets overall because the major indices are closing near their highs of the day right now. The S&P setting, by the way, new intraday and closing records. The Nasdaq is less than 1% off its high, while the Dow eked out a gain of 10 points. So for more on what's been driving and what's next for the markets, let's bring in Katerina Simonetti of Morgan Stanley Private Wealth Management. Katerina, what does it say to you that we're having this generally negative conversation right now about a key part of the market and the economy, yet the Nasdaq is 1% away from record highs, the Dow is a little over 1% from record highs, and the S&P is at record highs right now?
Well, Dom, the market has been extremely positive over the last couple of weeks, which is unusual, especially for the month of February that has been historically volatile. And when we're thinking about the backdrop of the tariff fears and executive orders and higher bond yields, it is almost interesting to see this development, and perhaps it is the possibility of the war ending. Perhaps there is a general sense that European countries will have to step up, or maybe it's just the healthy economic backdrop that we have been experiencing over the last couple of years, but market seems to be quite opportunistic.
It's not just that, Katerina. If you take a look at yields, we talk about interest rates so often as a driving force behind these markets. We are still markedly lower than we were just a few weeks ago in terms of the 10-year Treasury yield. It's a benchmark for mortgage lending and elsewhere as well. What exactly is the rate importance for the overall market? Do we need to see continued rate gradual declines on the long end of things in order for this market to keep going higher?
Well, we definitely have an extremely data-driven Fed. And as we are kind of deciphering the news and are trying to see if tariff conversation, is this a policy or is it a negotiating tactic? Once we see the actual effect that higher for longer narrative it has in the economy, Federal Reserve is going to figure out the way to proceed. We're expecting two rate cuts this year, perhaps one in May and one in September. But in our view, there are so many factors that are going to go into it. And perhaps we're just seeing the broadening of the market. Last couple of years, the leadership of the market has been in technology, and seeing other sectors like healthcare, like energy, manufacturing, software, on the tech side, coming in and leading the way, is something that could be affecting this market as well as high yields.
Do you think that broadening out trade plays out markedly so in 2025, Katerina? Do we see names like financials continue to outperform? Energy was an outperformer today, albeit on higher oil prices. Does that rotation trade still happen?
Dom, it was a surprise to so many investors that technology was not the leading sector in 2024. It was, in fact, financials. Financials ended up being up 32% in 12 months. And we are going to see more of this as quality stocks are going to be leading the way. There's a lot of fear, there's a lot of uncertainty, but there's also a lot of opportunity in quality names, both here in the US and also in Europe.
Katerina, at 4%, nobody seems to be concerned about the labor market, the unemployment rate. Are there any cracks in the armor that you see, or is this basically, we're in this great environment for the labor market and therefore theoretically a great environment for the market?
We have not seen full employment at this level for quite some time. Is it playing a role in overall data, as we're looking at it? Of course. And it also, is giving investors that sense of comfort with the market. But we can't forget about the fact that we're coming off of the two extremely positive years, unusually positive. So there has to be realistic expectations of what this year is going to bring. Even with the healthiest economic backdrop, we're probably looking at the low single-digit returns, for the end of the year.